Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Crawley.
Well, just like that, all the losses that we saw in the stock market when the war started are gone. We're back, baby. What war? What's going on in the Middle East? No, seriously. The S&P 500 closed out the day on Tuesday at 6,967, which is above where it was when the war started back at the ending of February. So right here, I got the data right there. You can see it. For those watching on YouTube, you can see the data right there. But welcome everyone to the Wednesday edition of Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Crawley, of course, loan officer, Town Bank Mortgage, right here, Wilmington, North Carolina, where we break down the top stories impacting mortgage rates every single day and weekday when bond markets are open. So equities were having a day, and bond market wasn't bad. The 10-year yield was down just under 5 basis points. So it was just under 4.25, which is pretty amazing because, if you go back to the peak that we hit at the end of March, which was 4.4%. So we're down 15 basis points from that move. The 30-year fixed rate index over at Mortgage News Daily, they had the 30-year fixed rate at 6.31%, down 8 basis points from Monday. So, pretty good movement here. So, and now I will point out we are seeing some positive developments in the Middle East, which is what I think is causing some of this, but it's also just sort of, I remember one time, what's the movie? Down Below with, Fire Down Below. No, Fire Down Below. Down Below is probably another movie that shouldn't be talked about in polite company. Fire Down Below, Steven Seagal, one of his classic movies from the probably mid to late 90s. And there's this great scene where he's in this small West Virginia town, and he's talking to one of the girls who lives there, and he says, "Hey, does it bother anyone that the mountain's on fire?" And she's like, "Oh, well, that's that mountain's been on fire for 15 years." And he says, "That doesn't concern anyone." She goes, "Well, I guess no matter how weird something is, it will eventually become normal." Something along those lines. And it's sort of that way with the market, where you have something happen, whether it's Liberation Day back last April, and then you have the Iran war, is that you see immediate reaction, and then everyone kind of goes, "Well, I guess that's just kind of the way it is right now." And then you see people say, "All right, well, what's actually happening? What are the fundamentals? What are the issues?" And people start trading differently. And so people are still feeling optimistic about the economy. There was a report over at the Wall Street Journal out this morning, or this afternoon, I should say. JP Morgan Chase, Citigroup, and Wells Fargo's all say customers continue to spend, borrow, and invest in the first quarter of 2026, even as a war erupted in the Middle East and worries mounted about risks from artificial intelligence, inflation, and private credit. JP Morgan chief executive Jamie Dimon warned that while the broader U.S. economy was largely in good shape, quote, a complex set of risks threatened to derail its trajectory. While we cannot predict how these risks and uncertainties will ultimately play out, they are significant, Dimon said in a statement. So people are still feeling pretty good about this economy. And then on top of it, we did get an inflation report that came out on Tuesday. And while it wasn't great, it was not a good report from a fundamental standpoint. But it wasn't as bad as everyone was expecting, and that was sort of the beginning of the day. So when the number first hit or I should say leading up to the report. Leading up to the report, I was expecting a kind of a downturn in markets, bond yields rising, and then the number comes out and it is so much better than expected that the market reaction was kind of interesting. So we got producer prices that came out Tuesday morning, and like I said, they weren't great, but they weren't as bad as everyone was expecting. So year over year, producer prices rose 0.5% in March. On a year over year basis, producer prices climbed to 4%, which was up from 3.4% in February and was the highest level since February 2023. So looking at those numbers just on their face, I mean, we're looking at 0.5% growth in 1 month. You extrapolate that over a month, or I should say, over a year, then we have a situation where we're looking at 6% inflation, three times the Fed target rate. So that's not great. But it's when you break down the numbers as well as what economists were expecting that really kind of changes things. So economists were expecting producer prices to jump 1.3% in March. They thought that was going to push the annual inflation number up to 4.4%. So even though the annual number rose to the highest level since, in over 3 years, and we did see a number that was really not that great if you were to annualize it, the fact that it was so much better than what economists were expecting, you actually saw a positive reaction to a 0.5% increase in producer prices, which under normal circumstances would probably result in a negative reaction from the economy. The energy, not surprisingly, drove much of the increase. Prices for final demand goods rose 1.6% in March, with nearly half of that increase coming from an almost 16% surge in gasoline prices. Food prices moved in the opposite direction, falling 0.3%. Services showed some relief. Prices for immediate demand services dipped 0.1%. That was the first decline that we've seen since last April, and it was driven in part by a 6% drop in margins for food and alcohol wholesalers. So essentially what we're seeing is people reacting to the increase in energy prices. And so you are seeing some deflationary movement because of the big jump in energy prices. But like I said, the fact that the number wasn't worse was taken by the market as a good thing. And so you had a decent inflation report. And then that also came out, or I should say, and then a couple hours later, we got some positive news from the Middle East. And mostly it was, we talked about this yesterday on the show about the U.S. blockade and how the U.S. blockade could work. And it's essentially pressuring Iran. So Iran's economy, this is one thing we didn't talk about yesterday. It was in the newsletter yesterday morning. Iran's economy is having some problems. So even before the war, the 12-day war with Israel had already caused some massive inflation in Iran. And so they are very dependent on that oil money. I mean, they need it. And so the fact that we're now seeing zero, and that's what was reported earlier on Tuesday, that the blockade is effective and that for 24 hours there was no movement from any ships in the Strait of Hormuz. And so that means Iran is realizing that they can't get their oil out of the country with this blockade. And the results of that could be Iran coming to the negotiating table and working out a deal with the United States to end the war and to end the blockade and standoff that we are seeing in the Strait of Hormuz. And so the fact that the blockade is working, it sounds like that would be a bad thing, right? So now we're seeing no movement in the Strait of Hormuz, but it's the idea that's going to pressure Iran to come to the table and negotiate with the U.S. and it sort of is going to force them to do that. And it might make them agree to some of the conditions that the U.S. has that Iran was not ready to do. And now with this sort of economic problems, could make them likely to do that. And we did see a report from I think it was CNBC, reported that diplomatic efforts may be gaining traction. Antonio Gutierrez said that U.S.-Iran talks are likely to resume following discussions with Pakistani officials. He said, the indication we have is that it's highly probable that these talks will restart. So you're seeing the pressure of the blockade putting pressure on Iran to come to the negotiating table and work a deal out. And so I think that's why you're seeing this positive movement in markets, both bond yields, equities, and I think even gas. I actually didn't check gas prices. What did gas prices do today? That's the all obviously important. Wow. All right. So, I mean, we have some oil actually under $90 a barrel. That's pretty great. That is pretty great. That's what you want to see. So I think that sort of all, so we got a decent inflation report that showed that producers are sort of handling the energy situation with kind of deflationary moves in other categories to offset the big jump in energy, which led to a better than expected inflation report. Not a good report, but better than expected. And then on top of it, the success of the blockade in the Strait of Hormuz, forcing Iran to come to the negotiating table. All signs pointing to a possible solution, which markets will obviously be happy about. And then speaking of gasoline prices, so this is kind of funny. So Scott Bessent, the Treasury Secretary, came out on Tuesday and signaled that, well, it's okay if the Fed doesn't lower rates. After a lot of pressure from, of course, the president himself and the Trump administration, including from Scott Bessent, that the Fed should be lowering rates. The Treasury Secretary came out and said, if they want to wait for some clarity, I understand that. He said that at was it the IMF Economic Forum? I can't remember where it was. I should have put that in my article. I did not do that. He made it clear, though, he still sees rate cuts ahead, saying, quote, the impetus here is they will need to cut rates, adding that he is highly confident that underlying inflation pressures will continue to ease outside of volatile food and energy prices. This will obviously ease the pressure on Jerome Powell, who is wrapping up his final term as Fed chair. He's supposed to be out May 15th. If they end up ending the investigation into Powell. Because Tillis, who's on the banking committee on the Senate, where the nominee would come out of, has said that he will not move forward until the investigation is done, is over, is complete. And not like in a way that like, oh, he wants to see Powell go away. No, he thinks that the investigation is not a good thing and needs to go away. And if that happens, it's resolved, then he will move forward with Kevin Warsh, because Tillis has said he likes Warsh. But this sort of not only eases the pressure on Powell, but even Warsh, who will be coming, more than likely will be the next Fed chair. And there was this debate about, is Trump really going to want him to cut rates almost immediately when he becomes Fed chair? And this is sort of sending a signal that because of this disruption by oil markets and the pressure that's putting on prices, that maybe the Trump administration is letting him know, hey, you don't need to cut rates right away. At some point, yes, but not right away. We're letting you off the hook, at least for maybe the first 2 meetings or so. So we will see. We will see what happens. All right, we got to go. So it's a good day for rates. Once again, 10-year yields down, mortgage rates down. Good day for mortgage rates. 2 good days in a row. That's pretty awesome. We will take it to start the week. You guys enjoy your Wednesday. We'll be back here Thursday morning for another edition of Wilmington Mortgage. Almost forgot the name of the show there for a second. But you guys enjoy the day. And remember, as always, do not wait to buy real estate. Buy real estate and wait.